Mortgage applications fell 6.4% as 30-year rates hit 6.76%. Will you still qualify?
With over $1.2 trillion in mortgage applications affected, the impact is significant. This video is designed to help first-time home buyers understand the current state of mortgage rates and how to navigate the challenges of rising rates. You will learn how to qualify for a loan, understand the impact of rising rates on your mortgage application, and make informed decisions about your mortgage. Specifically, you will learn about the current mortgage rates, how to calculate your mortgage payments, and strategies for qualifying for a loan. What are mortgage rates? Mortgage rates, also known as interest rates, are the percentage of the loan amount that you pay as interest over the life of the loan. For example, a 6.76% interest rate on a $300,000 loan would result in a monthly payment of $1,949. As mortgage rates rising to 6.76%, it's essential to understand how this affects your mortgage application.
How do rising rates affect my mortgage application? Rising rates can affect your mortgage application by increasing your monthly payments and reducing the amount you can borrow. For instance, if you were pre-approved for a $300,000 loan at 5% interest, you may only qualify for a $250,000 loan at 6.76% interest. This is because the lender will consider the higher interest rate when determining how much you can afford to borrow. What is a 30-year mortgage? A 30-year mortgage is a type of loan that is paid off over a period of 30 years. This type of loan typically has lower monthly payments than a 15-year mortgage, but you will pay more in interest over the life of the loan. With mortgage rates rising, it's essential to consider the pros and cons of a 30-year mortgage and how it will affect your mortgage payments. How can I qualify for a loan with rising rates?
To qualify for a loan with rising rates, you can consider strategies such as increasing your down payment, improving your credit score, or exploring alternative loan options. For example, if you have a credit score of 700, you may qualify for a better interest rate than someone with a credit score of 600. By understanding how mortgage rates rising affect your loan qualifications, you can make informed decisions about your mortgage.
What is the current state of the housing market?
The current state of the housing market is affected by rising rates, with many buyers and sellers waiting to see how the market will adjust. As of 2026, the housing market is experiencing a slowdown in sales, with a 10% decrease in sales compared to the previous year. However, with the right strategies and knowledge, you can still achieve your goal of becoming a homeowner.
Key takeaways.
In conclusion, rising mortgage rates can have a significant impact on your mortgage application and loan qualifications. By understanding how mortgage rates rising affect your mortgage, you can make informed decisions and navigate the challenges of the current housing market. Remember to consider your options carefully and explore strategies for qualifying for a loan with rising rates. If you're ready to learn more about mortgage rates and how to qualify for a loan, click the link in our description to download our free mortgage guide. With this guide, you'll get access to exclusive tips and strategies for navigating the challenges of rising rates.
Don't wait, take the first step towards becoming a homeowner today.